Zoom. Good morning. This is Cherish Cruz from Cruz Law. I am an estate, business, and business succession planning attorney. And today I'm joined with Raymond Payne and Jeff Morris. And we're here just really to talk about, certain mistakes that as you're starting your business or your company that you need to start thinking about, both from a CPA perspective, a business attorney perspective, and as well as a resource for Jeff, with the Small Business Administration from UGA. And so I'm going to have them introduce themselves. And if you could go ahead and do that, Raymond and Jeff.
Sure. I'm Ray Payne. I am a CPA and financial advisor in Atlanta. Our practice is mostly focused on small business owners or retirees who are plus or minus 10 years from retirement. So we focus on wealth planning, financial planning, and tax planning for those retirees or pre-retirees or business owners who are looking to sell their businesses or wind down their businesses. And also we work with a lot of new businesses that are starting up, so that are trying to get their legs underneath them and get incorporated, figure out the best strategies for moving forward. So I'm really excited to be here today and to walk through these issues that a lot of solopreneurs and new startups kind of meander through and try to get through. So hopefully we can answer a lot of your questions today.
Good morning, everybody. My name is Jeff Morris. I am a business consultant with the University of Georgia's SBDC, located at Kennesaw State University. And we specialize in helping small business upstarts and entrepreneurs, helping them with everything from writing a business plan to reviewing your financial statements, to marketing, social media, and all the things that it takes to get a business up and running the right way. The only two things that we do not do are taken care of by my two friends on this call, tax and legal. So the SBDC does not help with those two areas, but I have a great team in Cherish and Ray, and we always refer business to them to help them with those client needs. But thank you. I'm happy to be here as well. Look forward to talking to everybody.
Yes, thank you so much, Jeff. And really what we want to use this time for is just to serve you in this sense and give you an overview, things to look out for, a preliminary roadmap as to how, things that you should be looking out for as you're starting your business, and things that will prevent mistakes and save you a lot of time and money, and hopefully heartache as well too. So in terms of that, So just from the perspective of you're not a lawyer. And so, it is tempting to think, oh, okay, maybe I can just go on LegalZoom and do this. But the reality is you should really lay the proper legal foundation for those for your business. And what that means is when you are starting a business, everyone thinks that it's very sexy and exciting to start a business, but really what you need to do is lay the proper foundation as to starting what you will hopefully be a successful business. Unfortunately, the statistics show that most businesses fail in the first 3 years. And what you want to do is you want to look at your business as an investment in yourself, as a revenue generating idea. And, if this is something that you're just contemplating, it really involves a lot of time. So just know that when you're going to places like LegalZoom, that you're not necessarily laying the proper foundation. You really need someone and to take the time to get and set aside finances for the investment into yourself and in your business. So, and then, one of the biggest mistakes that I do see, and Raymond and Jeff, come here, please jump in accordingly, is not incorporating. One of the reasons that you do want to incorporate is you want to make sure that you are protecting your personal assets. So, sometimes I'll have, this wonderful, eager small business owner who's actually either started a business already, or they're thinking about it, but they don't think about protecting their personal assets. And by incorporating, you do protect your personal assets. You definitely want to, and we'll discuss this more in detail, but just think of it like a shield around whatever personal assets you have. That corporation will protect your personal assets if maintained separately from your business assets. Do you have any insight into that, Raymond or Jeff?
I do. I want to jump in and just say that by incorporating, it also allows you to easily separate yourself from the business. So when you're not incorporated, you and your business are really one legal entity. But by incorporating, you get a separate tax ID for your business. And we'll talk about this a little bit later. That's very important, particularly during tax time, because you want to be able to separate the business activity, the business income, the business expenses separate from your personal income or other income you may have and your personal expenses. So incorporating also just further distinguishes you, not to the public and for yourself, the difference between what's a business activity and what's a personal activity.
And I think that a lot of the business owners, they think that staying a solopreneur or just doing things themselves is the best way to do it. And that is not. So to Ray's point, making sure that you're separated from the business, because if something happens, it's all going to fall back on you. And I think especially people that are just starting out, they don't know how to go about setting up those corporations.
Yes, definitely. And then you never want to be just, because we are also and this isn't legal advice, but just, generally, you never want to be in a situation where I coulda, woulda, shoulda. And sometimes business owners get into that because, their business rapidly grows and, they're bringing in revenue, but they haven't failed, they failed to separate that. Okay. And then, so, there's different types of corporations. There's a C Corp and an S Corp. Raymond, do you want to speak to that a little bit?
I do. So oftentimes small business owners will get confused as to whether or not, being an LLC, which is basically is really easy to do. You organize, you just send a letter to the Secretary of State, and basically you've got a separate name for your business and you are a legal entity in the eyes of the state or Georgia or wherever you incorporate. So that establishes an identity separate from you. The tax treatment of that is basically the same as being a sole proprietor. So where you may have a separate legal entity, the tax treatment is as a sole proprietor. You file all the business income and expenses on a schedule on your personal tax return. That LLC can elect to be taxed differently. So it's not changing from an LLC to an S Corp or to a C Corporation. It's electing to be taxed as differently than a sole proprietor. So the next step up, looking at the chart, would be an S Corporation. So that is an LLC. You make an election for the IRS to treat your business basically as a flow-through partnership. And that's ideal if first you want your business to be making money. So it doesn't make sense if your business isn't making a profit to make an S Corp election, because there's certain administrative expenses that you're going to incur that you will want to avoid if you're already not making a profit. So for one, you have to pay yourself a salary. If you're an S corporation, you'll have to file a separate tax return. And so generally we tell new companies that you want your profits to be at least $30,000 a year before deciding to make that S corporation. So if your business is still running at a loss, for tax purposes, it's perfectly fine to just remain the LLC that's taxed as a sole proprietorship. But some of the benefits of being an S corporation is that your profits from the S corp aren't taxed as aren't subject to self-employment taxes. So when you're a sole proprietor, all your profits are subject to self-employment taxes. But if you're running at a loss, there are no self-employment taxes to be assessed against you. So another reason why you want to be making a profit before making that S corp election. But you can have multiple partners in your S corporation. So family members or non-family members can be a partner in your S corporation and invest in the business and share in the profits. You don't have to have other partners to be in. You can be one member S corporation, but it does allow you to have other investors in your business. The next step up above that would be a C corporation. Again, it's a more formal structure. You have to have a board of directors. The only way you can take money out of the business of a C corporation is if you pay yourself a salary. If you do anything beyond that, that's going to be treated as a dividend. And so you'll pay taxes on the dividends from the C corporation. So C corps are really for really mature businesses that have multiple owners, multiple employees, and it really needs to be set up for large influx of capital coming into the business to support the growth and operations of the business. So the way that it's listed here, you would start with the bottom and work your way up, LLC, make an S corp election, and then if you're really looking for outside investors, then you would want to be treated as a C corporation.
Awesome.
And remember, if you're not making money in your business, you're not in business. And a lot of small businesses don't realize that it's either a business that's going to be profitable or it's a hobby. So when you are thinking about going to the bank and looking for additional resources, if you do not have your books in order, if you're not profitable, they're not going to look at you. So just be aware of that. Get your stuff in order before you need those relationships, before you need those banking opportunities. Make sure you have your business in order and you're making profit.
Yes. And I just wanted to add a little bit to the LLC, the S Corp and the C Corp. Speaking to your point, Jeff, you're right. It is an investment, and you shouldn't be operating your business as a hobby, especially if you are the breadwinner of your family. And so fundamentally, everyone's like, oh, it's so easy to set up an LLC. But in order to make sure that you have that adequate protection, you need to have the right operating agreement. So an LLC requires a good, business, if you're running it, will need a good operating agreement. It addresses everything. It has that layer of protection to it, and it legitimizes your business. So when you are looking for lending opportunities in the future as your business expands, it's important to have that. And then, we'll go into books and records later on, but just know that, an LLC incorporation is not enough. You should have an operating agreement that addresses things like death, disability. I also do probate work. And a lot of business owners will die without a business will. And, that can be addressed in the operating agreement, or it can be addressed in your estate planning documents. But it's hard to wind up a business if you don't address that. So, especially, after you pass away. So, evaluate your business structure like we discussed: sole proprietorship, limited liability company, corporation, C, or an S corp. Just to recap and to give you that information. And then, if you are bringing on someone and you have a partner, I was just having this conversation with one of my dear friends who's a banker. It's great to, go into business with your friends and family. However, what usually happens, and what I've seen before, and what I don't want for you to happen, this to happen to you as a business owner, is not having a partnership agreement. Now, a partnership agreement is a written contract between you and the other parties who are either invested in your business via money or time. And you need to consider that, because at some point, if you need to exit out of the business, how do you exit out of the business? What if you get into a disagreement as to how much money should be spent on marketing, or I want to grow the business this way, or I need, I'm putting in my personal capital to expand the business, but the other partner doesn't want to. These are real life situations that happens every single day as businesses grow. And, it's great to, start it with a handshake, but you need to memorialize those things and then continue to evaluate it as your business grows. It's fine when there's, a minimal capital investment in the beginning of the business and you're both putting in $500. But what happens later on when that business grows to, and which you hope to grow it to, millions of dollars. And then you want to pass on that interest to your family members or to other people. Any insight from you, Raymond or Jeff?
Yeah, I would just say, I'll reiterate what you just said. I mean, having that partnership agreement and that operating agreement for an LLC is critical. It will dictate, one, how you're going to run your business together. And if you need to dissolve the partnership and dissolve the business, the terms under which you'll do that. So it's very important to have that partnership agreement in place. Also, from a tax perspective, the IRS will look to see if there's a partnership agreement in place when it comes to the tax attributes of the income and expenses that's being derived from that business. There's certain tax rules regarding a partnership. And so having that partnership agreement in place is critical.
And Jeff, as you're dealing with new companies, what are, that are forming or coming in, what are you seeing from that respect, like in that respect, with two people who are wanting to start a business together?
A lot of them are sole proprietors, but they have the ability to come in as partners, and usually it's a husband and wife team, or two young friends, or two friends that are looking to do things. But sometimes I don't think they realize that going in as a partnership, looking at their personal finances is key. Because if you have a lot of debt, or if you have bad credit, that's going to affect the amount of money that you can receive, if you're going to be able to receive anything. And selecting the right partner is so important, because you guys can be friends today, but when you get into business, that can change, because when money is involved, it always makes those relationships a little bit more complicated. But making sure you know who you're picking, just like a spouse, because a business is like a marriage.
Yes. And just also to contemplate too, you may be married today, and I don't mean this in a facetious way, but you might not your business should be able to survive any kind of death, disability, or divorce, especially if it's a growing business. And so, especially during this pandemic, as we've seen the rise of cases, of divorce cases, a lot of couples go into business together. We've seen it with Bezos and, the Gates situation. And how do you split those growing, which could be, potential assets? And you may think to yourself, oh, I'm never going to get there. But, that's something that you need to prepare for.
Right.
And then I think this is key, if you guys can speak on this, but, failing to separate personal and business expenses. What have you seen, Raymond and Jeff, on with respect to that? And how does the dreaded IRS, look?
Yeah, it's huge. And if you don't separate the business and the personal expenses, a lot of items that you may put on your tax return as a business expense, if you can't support that, the IRS will disallow those deductions. Right. And just from a record keeping standpoint, we'll talk about this too. It's just important for you as the business owner to know what is the health of your business. And if you're not recording that and monitoring it, then you don't really know what the health of your business is. So aside from the tax, issues that you would run into by not separating the business from the personal, you as the business owner won't have any insight as to the health of your business if you don't separate your business expenses from your personal expenses.
I think that a lot of business owners, especially upstarts, they just don't know. They don't know how to do things. And when I try to work with them, I try to be as candid as possible, because learning it on the front end is so much easier than getting down the road. And then you have these really bad habits that you don't know how to separate your personal expenses and your business expenses. And Ray and I were just talking about this. There's so many people that do things that they're really not supposed to do. Some of them know it, but some of them really don't know it. And I think being a consultant and giving them advice to help them deviate from personal expenses and business expenses is really important. And another thing that they challenge with is money. They just don't have the funds. Most businesses fail in the first couple of years because they've run out of cash. And if you're not making the money to pay your bills, you're going to start taking your personal monies to pay for the business expenses. And that is just a recipe for disaster. So following advice from counsel is really important. And if you don't have it to start yet, take your time, save some money before you can launch, and then launch the right way.
Right. I think that is a lesson learned. And also, utilize resources like Jeff. I mean, this is a great service where you can really lay the foundation and really wrap your head around the business aspects. I think when I transitioned from myself, from being a practitioner in the sense, or working as an employee, to a business owner, if I had tapped into the resources that Jeff that is available through Jeff and his consulting work, then I think I would have been in a stronger position. So part of this webinar is to make sure that we are educating people who don't necessarily know where to start. They don't know where the roadmap begins. And this is a way, and it's a service back to the community, where we do really want you to start off with a strong foundation and then grow the right way.
Because we have 18 offices in the state of Georgia, and our services are at no cost to business owners. And so many people don't realize that we are an extension of the SBA under the University of Georgia educational system. So how we started, it was back in the 70s when President Jimmy Carter went to the University of Georgia and said, listen, we need to do something for our citizens and our small businesses. And then that's how it launched. And now we have offices all over the country and 18 offices here in the state of Georgia. So, and again, no cost to you as a business owner.
And that's amazing. So, people aren't aware of those resources or they're intimidated. But knowing Jeff and working with him in the past and Raymond, they will hold your hand and they will, provide you the right resources, because really what we need, from a state perspective is, strong, healthy businesses where, you can pass on generational wealth. So one key thing, and we've touched on this slightly, but is, evaluate your company's record keeping. Is the company keeping, these are key questions you need to ask yourself as a business owner. Is the company keeping good records of its income and expenses? Is the company keeping track of all of its contracts? Because things change rapidly, especially, with tax changes and everything. And then is the company keeping track of all employee records? That is key, especially as you start hiring people. And then is the company keeping track of all tax filings?
Let me speak to that really quickly.
Yeah.
When a business wants to go to a financial institution and they're looking for additional resources, if you don't have these items in place, you might as well not even show up to that appointment, okay? Because bankers, they go through so many people on a daily basis, weekly basis, monthly basis, that if you don't have your dossier in order with your accounts, with your records, with your taxes, your credit, if those things are not in order, they're not even gonna schedule the appointment. So make sure you look good on paper and utilize your CPA, your attorney, and make sure those things are in order before you go to the bank and ask for that additional funds.
Yeah, I mean, it's just really basic. I say this all the time, if you don't track it, you can't measure it. And if you don't measure it, you can't manage it. And so you really, at that point, if you're not doing those things, you really aren't running a business. You're just kind of, working
It's a
a job
hobby.
and hoping things work out.
It's a hobby.
Right. And I think people are not aware of it when they first start out. They have all of these great ideas. And it's really just putting the proper structure. And I loved what you said, Jeff, about habits, because habits are key. We all know that from exercise, health, everything, but it's those key habits that you have as a business owner that you need to start to develop. And I think by, having Jeff and, reaching out to the right proper resources, by reaching out to Raymond and Jeff and myself, that you could put those proper habits together. Raymond, do you want to talk about tax strategy a little bit?
Sure. And we've touched on this a little bit already, but basically your tax treatment will be driven by how your business is incorporated and what elections that business will make. So generally speaking, our tax laws are basically, they favor business owners. So the income from a business is, generally speaking, taxed at a lower rate than the income you earn from a W-2. And so whether it is you're an LLC, there's the new law in 2017 allow for solo practitioners and sole proprietorships to be able to deduct what's called the qualified business income deduction. So basically that generally caps your business income at 20% tax rate. Whereas, the top marginal rate for a W-2 income is over 40%. So it's, you get a lot more favorable tax treatment being a small business owner or having business income. But basically, that's going to be driven by whether you have made an S Corp election or not, whether you are in a partnership or not, or whether you are a C corporation.
Awesome. And then, just evaluating what your current strategy is and then reevaluating it as so, one practical tip is what's your current strategy, right? So hopefully you have a team in place like, Raymond and Jeff, and setting up the proper foundation, right? And then that's your current strategy, but what is your next strategy as your business grows? You need to continue to evaluate it. And then,
can I just jump in and marry that last point to the previous one too? I often tell people, don't let the tax tail, lead the dog. So your strategy should be your overriding objective. Like, this is what I'm in business to do. This is how I'm going to do it. This is my market. And then figure out the most tax efficient way to carry that out. So oftentimes people get confused and think, well, for tax purposes, I'm going to do this. Well, but that may not be your best business strategy to go down take a certain tax position. So first, figure out what it is that you want to do. What is your overriding strategy for your business and how you want to operate? And then figure out what is the most tax efficient way to execute on that strategy.
Let me just say something on just getting the business started. It starts with a plan. And having a business plan is very important to launching a business, because that business plan, the template, is going to ask you the tough questions that you need to answer. And unless you put it down in black and white, you could have this wonderful concept in your head. But if you don't have it on paper and someone can read it and say, okay, this is how you're going to make money. This is when you're going to start to make a profit. And those ideas when it comes to marketing, social media strategy, online, if you don't have those things in place, it's going to be tough to get it started, because you're going to get started. You're going to have the energy and the enthusiasm to make it go. And then you're going to hit a roadblock. And then if you don't have that plan to help you go around that roadblock, you're just going to get stuck. And the business keeps going because the expenses continue to build up. And if you don't have a game plan to address those expenses by bringing in income, then again, the business will die.
And really, and we don't want to, I totally agree with you. I mean, had I, started with a business plan, I am like a lot of business owners. I thought business would fall into my lap.
Right.
Who needs a plan? And, we were never taught this in law school.
Right.
But also, I just want you to say it doesn't have to be perfect. And you should enlist, Jeff, because you do help businesses with their business plan, right?
Yeah, and it's a living document.
It is a living document.
Constantly changing. You're making changes here. You're doing things differently. You're adding, you're taking away. So, don't be so hard on yourself when it comes to putting it down on paper, because it's going to change. And when we help businesses with projections, right? If you're going for a loan, the bank wants to see at least 2 or 3 years of financial projections. They want to see how quickly can they get their money back that they're going to loan you. Those projections are just projections. They're just numbers, but it has to make sense. And that business plan is going to help them connect the dots to making the financials as close to real as possible.
Yeah, definitely. And so just, some other things that you should be considering is making sure that you protect your intellectual property. I am not an intellectual property attorney, but I know plenty and I have a great network of that. But, especially if you're in the tech space or other spaces, or you have a concept or an idea that needs to be protected. And you may not think that it needs to be protected, but even just investigating that, and it's an idea that you want to protect, set aside some money for that investment. And then, safeguard your creations, especially if you are in the tech space or you have a proprietary system that you want to use. And then make Oh, yeah, go on.
I'd like to say, but you're going into that trademark, so I'll wait till
Yeah,
you finish and
yeah,
then I'll
just
talk
don't
about it.
infringe on a trademark, do your due diligence, and check, one thing that I've seen with a lot of companies is they want to name their company something, but it's already out there.
Right.
Or they want to have that concept, but it's already been trademarked. So do your own research, and preliminary Google search, and then especially if you're in a very competitive area and you need to just do your due diligence on the end, because you don't want to get sued. I mean, the last thing that you want to do is get sued.
So one thing I need to address on that, we deal with a lot of businesses who have these creative names, these funky names, these very unique names. So a couple of things on that. One, being creative is one thing. Being able to search it on Google is something totally different, okay? Being able to spell it is another thing. So you don't want to create something that is so out there that people can't even spell it and find you, right? So another thing to think about is when you have a name or a concept, if you don't check it on the Trade Patent Office website, what you don't want to do is create this name and get your tax papers and your EIN number and all of these numbers, all of these identifications with this name, and then it's already out there. And someone comes to you and say cease and desist. And they're probably going to have more money than you to fight any kind of legal battle. So do the work on the front end,
Right.
and make sure that you're taking care of those things and dotting your I's and crossing your T's, because you don't want to have to deal with that 3-4 years and going through a rebrand. That's
Right.
expensive.
It is expensive. And then, your client and your client base from a practical standpoint is already familiar with that slogan, and they've already adapted to it. So changing it would be an additional cost to you. So, just again, practical tip, do your due diligence on the front end. So do your research, just making sure that you have contracts that you have with customers and vendors. A handshake is not what it was before. And, we live in the United States of America. We're a very litigious society, and you need to have those proper protections in place. So making sure that you create the right contracts, and then not using non-disclosure agreements. If you have confidential information or proprietary information, make sure that you have a non-disclosure agreement in place. Because if you don't, then you're not protecting that confidential information, which may hurt your business in the future. And, does your small business have one in place? Just making sure you have that. And then employee documentation, like we're talking about, keeping good books and records. And then making sure that you have an engaged, experienced business attorney, really just guiding you through the process. That's what I love to do, from the very beginning to the very end. And this is going to be a first in a 3-part series where we're addressing all of these concepts and bringing you this critical information. And then just, really evaluating how does your small business rank. And then if you want to talk a little bit more about the resources that you offer, Jeff, that would be great.
My pleasure. So again, the SBDC is a resource partner with statewide resources. We have 18 offices in the state, and we just added a new office down on the Morehouse campus. So we're able to help business owners with marketing plans, social media, resources, books, reports, statistics, demographics, and just be a resource and a consultant and advisor to them to help them as they grow their businesses. I think you can go to that next slide.
Sure.
So if you ever need any help, you can reach us at that Kennesaw@georgiasbdc.org. that'll go to our office. And we have 5 consultants that we work with in that office, and they specialize in anything from banking. We have a CPA that works there, a lot of bankers, marketing, a social media expert. And it's really a good office with some tenure. And I specialize in working with a lot of small businesses and startups. Go to the next slide. So again, we provide one-on-one consulting to business owners. And we specialize in 3 main functional areas. And the one is quality educational programs, where we offer webinars and seminars. Almost every day, we have at least one webinar or seminar going on. During the pandemic, they were free, but now they're at a very low cost, anywhere between $20 and $50 for one of those programs. We provide market research. So if you're looking at a specific location or demographics, we have reports that we can pull and share with you. And then we provide the one-on-one confidential consulting. And that is a great time to spend with your business consultant, because you can share things that you're probably not going to share with just anybody. And we give you candid advice. Like Cherish said, we hold your hands. We're not going to do the work, but we will hold your hand and make sure. And if you just need 1 session or 100 sessions, it's up to you, because again, it's at no cost. Some of the things that we specialize in is the business plan preparation, growth and marketing plans, financial projections, starting up entities, and then business development, helping them sell. Because a lot of business owners, they love doing what they do, but people don't like to sell, right? They don't like that rejection piece. So that's what I specialize in. I think it's one more.
Awesome. That's
more
great.
slides.
Yeah.
So a little background on myself. I've been selling for more than 20 years. I hold a Series 65 FINRA license. I work with a lot of CPAs and accountants and help them with their clients and their practice in insurance, investment, financial planning. Do a lot of work with Ray. I worked with ADP as a salesperson, and I was in their sales training program. ADP has a great sales training program. If you didn't know how to sell when you left that place, you were not paying attention, okay? And worked with the Ritz-Carlton. It was actually one of my first jobs out of college. And the Ritz-Carlton really instilled in me service.
Yes, there's this great book that as I think it's Excellence Wins.
Yes.
And it is by the former CEO, CFO. I can't remember, but Excellence Wins, and it's about the Ritz-Carlton principles.
Right.
And I love, staying at the Ritz-Carlton because they know how to do it right. But just as you're learning and you're growing, if you can get that book, Excellence Wins, it's a wonderful, wonderful resource and will inspire you to do your best.
Right. And that's why you like staying at the Ritz-Carlton, because they anticipate your needs.
Mm-hmm.
By your last name, they are on it, because
they are on it. They are on it. Yeah. And those are the things, the value propositions, and we'll discuss this more in the other series as we're because we're wrapping up right now, but yes, that is something that we should do. It's a great, great book, but I love the Ritz-Carlton.
Who doesn't?
Right. And then you can follow Jeff on social media at Facebook and then Twitter. And which one will you be?
So this is my takeaway for the people that attended this webinar, seminar, conversation. We gave you some really good things, right? And you could take those good things and you can use them. And when you use them, good things will start to happen, bubble up. They will fester, they will blow up for you, right? Or you could take them and do nothing, and then that's what's going to happen in the glass on the left. So which glass do you want to be, right?
I like that. I like that. I thought it was like a half glass, half full, but no, I like the bubbling up.
Right.
And you know what? And just to be candid, and just Raymond, if you want to, put your or tell your information as to how to contact you. So this is Jeff's information here, and then
Sure.
this is my information, but if you can put your information or just, tell them how they can reach you.
Yep, you can go to our website, www.cernercapital.com, or you can reach me at ray@cernercapital.com.
Awesome. And I just a plug for Jeff and Ray. I really enjoy working with them. We've done this several times, but I think it's really key. And we're focusing on this series because we understand that a lot of businesses don't have the proper foundation, and we want to help you grow. As we're navigating outside of the pandemic, we are seeing a lot of people who are choosing business as their opportunity and they're leaving their jobs. And so we want to help you make the transition. And if we can be of a resource to you, we are happy to do so. So thank you. And if you have any questions, feel free to reach out to us. We are happy to help. Thanks.
Thanks, everybody.